The last time we talked, I think, was around Bitcoin Prague, and I think just a month later, Strategy came with something out on the market. I think it was July when they launched the Stretch Preferred. I'm not sure about 100% about the month. Please correct me, guys, if I'm wrong. But around that era, they launched Stretch, and I've seen you post about Stretch here and there a little bit. Now, to be totally fair, I've overlooked strategy for most of my Bitcoin life. I completely missed that one. And I even had Saylor, the CEO himself, on my podcast. I was at his 100K party, and I just like missed that opportunity. In December, there was a guest on that told me about strategy. I mean, there have been like 20 guests already on, but like with him, his story kind of resonated with me. And so I looked into it. And I'm now on my journey on diving really deep into strategy and what the implications are, like what they're doing for Bitcoin and what the potential for the company is in the coming future, if they have a potential to be the number one, the number five, the number 10 company on planet Earth. So from that background, I'm just really curious because I've never talked about strategy with you on any of our podcasts that we did before. How do you look at strategy and their amazing product market fit they found now with Stretch and all the preferreds? How do you look at those?
Yeah, that's a great subject to talk about. I got involved with strategy right after Michael Saylor initially talked about his accumulation program back in 2020. And at the time I got into it, and the shares obviously went way up during that summer. And in the fall, I ended up selling it. I sold all of it. And I mean, today, if I'd ever kept that on there, I mean, we're talking multiple millions of profits that I ended up, leaving behind. And the reason was because I really couldn't understand what was driving strategies valuations. And that's a very difficult subject sometime. Many people pass up on Amazon and other of the companies like the Magnificent Seven because it's a very difficult process to put future earnings into some valuation model when you're looking at something that's either groundbreaking or requires on a network to function. So the good news is I kept following strategy, and then a couple years later, after the last crash, the last cycle there, I just had a revelation. I could tell that Saylor and the company were not going to stop accumulating Bitcoin. It was very obvious to me, and I kept trying to understand where it was going. And I came up with the idea that it would become basically the world's first Bitcoin bank, or maybe bank's too limiting an idea, but the first financial institution. And and I came up with a sentence to describe them. And what it is I remember writing it down, that it is a global growth company that is utilizing its treasury operations through intelligent leverage to financialize Bitcoin. And I went back into it, and I ended up buying a lot of strategy stock, and I just held it. The reason I recently got out of it was because I just I felt like I wanted to have more exposure to Bitcoin itself. And it's obvious to me now that strategy is not going to stop. In fact, I'd have to say that they have demonstrated a groundbreaking series of products culminating in what you just said, Stretch, STRC. And so the price was very low again on it. And I thought, you know what? I still believe in what they're doing. I know where it's going. I don't necessarily like the fact that they are taking Bitcoin off the market forever. I mean, you realize that, right, Robin, that when they purchase Bitcoin, it's not coming back. And right now, I forecast, I mean, I believe they will get to 1 million coins. I didn't think that they could do that. And I think it's going to be very quick. I mean, if this continues, and you realize that they're doing this in a bear market, right? We are in a bear market. They just accumulated over 4,000, almost 5,000 coins in one day using that product and ATM issuance too, based upon the premium. So I'll take a pause for a minute, but yeah, I'll talk about Stretch too in a minute, because that, you're right. I mean, it's revolutionary product.
I mean, they are buying tens of thousands of Bitcoin every week in a bear market with a low MNAV with, I don't know, they have a 15% premium or something like that on their stock, on the NAV, something like that, maybe 20%. And the sentiment is super low. Like, no, like we are in a low sentiment area of Bitcoin. We can see it on like tens of thousands of different metrics that we could all look at. But I think most people would just agree with that. Another question for me is, they found clear product market fit with Stretch. The Sharpe ratio is already a 5. They have a volatility of 1% just after half a year or like 8 months or whatever the product is around. How many Bitcoin will they able to buy once we are in a full bull market, FOMO hits in, the ATM of strategies going wild because more people buy the common stock also, and people like I talked to at least 5 different people already on Stretch outside of the Bitcoin ecosystem that were skeptical about Bitcoin, and I told them about Stretch. They all love that. The only question is like, can I trust it? But like, yeah, you can. It's like an easy thing to say, but like they all love the idea, and so it's kind of, I don't know. They found a money glitch, I feel like.
Yeah, you really need to think about how this product came about. It is a perpetual preferred, but let's call it, you could almost call it similar to a money market fund, a bond. There are so many things that it's similar to. It was developed, it's probably the first financial instrument in markets ever developed by AI. And it is revolutionary. You have to realize that all these other different products that they started with were building to trying to find the sweet spot of what they wanted to do. What's unique about Stretch is, let's just say that you call it a pseudo bond like device, right? What's so incredible is that they flipped the idea of what that is. So what I mean by that is, instead of the price fluctuating, they've made it a fixed price. And what they're doing is manipulating the interest or issuance to maintain that price. That's revolutionary, and it's working. And here's the other thing too is, yeah, when it first started out, it was a little volatile because they're trying to find the sweet spot in both the interest rate and in the issuance to maintain it inside that $99 to $101 framework. But they've done it. I mean, if you're watching there, even when we had that massive dump, and that's another thing, when we had the breakdown in Bitcoin's price where it wicked down to 59K and Strategy went down to like $107 a share, I think. And I missed that one. I got in a little bit late after that. But nonetheless, if you were watching, you saw that the par values dropped like a rock there. And what happened? You know what? If you were smart like me, you went in there and you bought it because you believed that they would be able to recover and bring it back into the par value. So not only are you returning, I've been returning 12% on my investment, but on top of that, I'm getting a premium on the par. Now, I don't think that's going to happen all the time in the future, but it's just something to watch for. So what is going to stop Stretch from achieving this, pendulum, this flywheel, this rocket launch? I don't know. I mean, I've tried to game it out. If you look, one of the smartest fucking thing these guys did was they ended up putting in over $2 billion as a reserve. That was brilliant. They can sit there and pay that dividend out for years. And here's another thing too. On this last earnings call, which was really a smart move, somebody, I don't know if it was Larry Lepard, but somebody asked them a question regarding Bitcoin's price and what it could fall to in order to put them in some part where they had to issue new credit or new debt in order to survive, basically, almost as if you were threatened by some, I don't know, maybe not bankruptcy is too hard a word for it, but threatened with liquidity or confidence in the market. You know what they said? Have to drop to $8,000 Bitcoin, and it would have to stay there, not just drop there, stay there. So if if Bitcoin went down to $8,000, first off, I'd buy as much as I could. And if Strategy was in difficulty there, I would probably buy as much of their stock as I could too. I just don't see how this. I'm not sure how this is going to fail. It just seems like it's a successful launch that's going to continue to build on itself.
Yeah, and I think something interesting also to note here is it's not debt, so they don't owe anything to anyone. I mean, they still have a little bit of debt of things, some convertibles, but it's like very little to what they have, and they have to plan to like dial it down. I think it's a very important thing that people don't understand. They think there's a margin call risk with Strategy. If like Bitcoin goes down, they're liquidated.
That's a good point. In fact, that's exactly what I was trying to say, but you put it much more succinctly. And it is that idea of margin call, or the idea that they're over leveraged. And that is not the case. Just get into the numbers, do your research, and you'll see clearly that they are not. So, I guess I said that's all the good news, and that's great. But nonetheless, just be aware of the fact that Strategy is taking Bitcoin off the market, and it's probably not coming back. And for everybody out there that's hodling, you will be rewarded for your patience. For those people that are over leveraged or trading or fucking around with Bitcoin, you are taking a real risk here, because at some point you do not know when Bitcoin is going to rip. Nobody does. I talk about these different ceilings based upon past price performance, or based upon different options, futures, trading, different heat maps. But nonetheless, I don't have any clue when Bitcoin is going to rip. Bitcoin has a very narrow period of time in which it does rip. It's like 10 to 20 days max, maybe within a year. And if you miss those days, you miss them. So this is not a time to be trying to be smart with Bitcoin. This is a time for you to accumulate, stack like a smart psychopath, and then hodl. Hold on to that Bitcoin. Do not lose it.
I think they did some study with the S&P 500, and with Bitcoin, it's even more extreme, where if you've missed the 10 biggest days in the S&P 500 over the last 30 years, you've missed on like 50% of the returns. So it's like just 10 days in like 30 years make like 50% of all the profits and gains in that period. And with Bitcoin, I imagine, I haven't seen anything, it's probably even more extreme, where there's like a couple of days per year where you make most of the gains. And like, no matter who's selling your course, nobody knows what those days are.
Nobody knows. That's right, Robin. And, it's very important, especially, getting back to how we started out this conversation with Strauss and Howe, and their discussion around what's called the fourth turning. These are chaotic times that are going to cause tremendous volatility in markets. I don't think we've seen anything yet, whether it's Bitcoin, gold, oil. One of the things that's really interesting about AI that we haven't discussed, and I don't know if I've even discussed this on the air with anyone before, is that if you understand AI, and if you're a fan of Jeff Booth's book, and have followed him for some time, he is correct. I mean, technology is deflationary. The reason we haven't benefited from the deflationary print of technology is because governments and fiat currencies are printing to capture that and more. So what is going to happen in an AI world where we see the ultimate deflationary impulses going forward? If you want to talk about some interesting theory and things to think about, that's an interesting one. I personally have looked at the technology. I believe it's real in the sense that, yes, there are AI bubbles. Yes, there are interconnected debt instruments between these different organizations, the frontier models, the hyperscalers, that should give you pause. But AI itself is not going away. It is going to continue to build. It is a technology that is a must-have. And it's also part of why we are engaged in a superpower arms race right now between the US, China, is because of that AI potential for both battlefield tactics, weaponry, and decision-making, including these autonomous weapon systems that are coming. So getting back to what I was saying, past this chaotic period and if deflationary impulses come, you have to realize that what is AI actually replacing? That's another thing that people don't discuss very often because we talk about jobs that are being taken. But you have to realize that everything that's going on between your ears right now, look at me and look between my headset, everything that's going on between my ears right now that's the threat vector. That is what AI is coming for. You know, when the diesel tractor and the gasoline tractor were developed and they were deployed in the late 1800s, you replaced about 150 to 200 workers in a field. Those workers, though, then began to congregate into larger and larger regional areas and then cities. And in fact, the Industrial Revolution was born in this period. Tremendous productivity for these workers. When you replace thought, when you replace a brain, where does that worker go? Where does the thought go to? What is the fallback job for that? And that's not being addressed. You know, we can look at the numbers that are coming out right now, and they're astounding. I'd have to say the biggest one that really rocked me on my heels was when the leaked memo from Amazon came out about 5-6 months ago saying we're not going to hire 600,000 people over the next 8 years because of AI.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks, or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called MicroStrategy. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With MicroStrategy, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroStrategy is not selling the washer. MicroStrategy is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microstrategy.io.